So how did the market end for you today?
Well, we were up slightly. Obviously, the big attractions for the day were Safaricom and Equity Bank. The two actually launched a money product, a banking product yesterday, a mobile money banking product, which is quite unique. And to say we saw lots of trading coming through that. Equity was the major gainer, and on the other side of the trade, we saw Rea Vipingo issuing a profit warning, and it was the main loser of the day.
And speaking about this profit warning, I mean, it's been put down to drought. How are people viewing this particular profit warning?
I mean, obviously, the agricultural stocks have had a very good run, and many investors had invested in Rea Vipingo, thinking that it would be like the same trend towards, of a rally in the commodities. But when you look at Rea Vipingo, it produces sisal. It's not had as good a run as coffee and tea. Obviously, sisal has to compete with the synthetic version. So we've not seen the sisal prices rallying as much. And so with production having declined part of last year and well, a little bit into this year, the company has had to issue a profit warning.
And it looks like Standard Chartered are going to cut interest rates.
Yes, they did. I mean, they follow a trend which was established by Barclays Bank. Barclays was the first to spot that the interest rates in this economy are probably going to come down quite substantially. We've seen the Monetary Policy Committee meets tomorrow. The interest rates are the best rate is currently at about 6.75. They might bring it down, but still we think that the economy is very supportive of lower interest rates. Average lending rates are at around 15%. Best lending rates are at about 12%. And we think with inflation, almost equivalent to the UK inflation rate and other factors still positive on the economy, it might suggest that we might see lower interest rates going forward.
Another interesting bit of news that passed over our desks here today. We've just been hearing from the chairman of the Kenya Tourist Board how there are hotels springing up all over Nairobi. And we see TPS Eastern Africa, the owner of Serena Hotels, it plans to raise over 1.2 billion shillings with a rights issue on the NSE.
Yeah, I mean, the tourism sector has posted quite a recovery. I mean, apart from seeing new investments coming into the sector, we are seeing also existing investors increasing capacity. And that's what we are seeing with TPS Serena. And obviously, we think that's going to be very sustainable. TPS Serena is also increasingly moving out of Kenya. They are going into Uganda through a share exchange and probably some expansion of some new units. And obviously, this diversification is very positive for the company. The only concern investors would probably have is the dilution, but the contrary to that is the diversification and the extra units that you get from that diversification. But obviously, I think this is very positive.
And this is going to be put to the vote, this plan to raise 1.2 billion shillings on Monday night. What is the word? I mean, you think it's like to get the go-ahead?
Yeah, I think investors are very positive at this point. Any rights issue, any potential additional investments are probably going to get the go-ahead from investors. They're looking for quality investments to make into the country, into the region as well. So it's very unlikely that we'll see any bottlenecks through that. I mean, we're probably also going to see a couple of other rights issues coming through. We have Kenya Commercial Bank, we have Kenya Power and Lighting, we have Standard Chartered, all looking to raise capital. And all these, I think, are going to go through. Obviously, now the logistics, the pricing is probably going to be the debate. But I think the market is quite supportive and open to capital raisings.
And just finally, we see the Kenyan Central Bank is to auction a 5-year, 12 billion shilling treasury bond to raise cash.
Yeah, that's for budget support. The central bank does this almost on a monthly basis. And obviously what we've been seeing, we've been mentioning about the interest rates. And obviously we're going to see that also the interest rate, the yield on that bond, we see that reducing. The last 5-year bond was last year in September. And so we're going, if you look at the 10-year bond, last year it was at 12%. If you look at the yield curve now, it is at about 8.6%, the 10-year bond. So we might see the 5-year bond that is on auction. It was now being auctioned today. So the results should be out late today or tomorrow morning. But we should see it averaging about 7.6 or thereabout. But obviously we're going to see a drop in the yield.